to thestockminer.com. I'm Brian Johnson, and we're about to enter a new week of trading after having a day off. 3-day weekend for the traders out there. And we'll be watching a lot of what we have been watching in the past. We have seen a lot of slow but steady bullish action over numerous weeks. We're all waiting for quote unquote the pullback, but as we've seen in the past, any and all pullbacks have been met by the bulls, all buying the dip. Will that change coming into the new week? Until it actually does, I can't change my sentiment of no, we can't expect it to change until we see it change within the markets itself. So we will continue to watch these lower levels. I really, honestly, guys, like these lower levels down here. I know it's a long ways away, but if you want to be on the more conservative side, you want to be waiting for some of these lower levels like here and or down here at this green line I have drawn in to be broken before you start thinking about your short positions. If you are long the market, these are places you want to be looking at maybe protecting some of your profits as well. So let's see what we get when we open up tomorrow. The futures have been moving. They will start moving again here in just a few hours. And we'll see if overnight action makes any difference where we open tomorrow. Do not be surprised if we do open maybe gap down a bit. I would I'd maybe expect that at this point. It wouldn't surprise me. Certainly wouldn't surprise me if we gap down tomorrow morning, and maybe as much as I don't know, 4, 5, 6 points. That's very possible. But keep in mind that we want to be very careful about just automatically going short until we see some confirmation of that, because the bulls are notorious for buying it right back up again. So if we look at the daily here on the Dow, you can see the big run. This is very indicative of all the markets we've been watching. My lower levels, bigger lower levels, if you want to keep these on your charts, have always been and have been now for many weeks, this 20-day moving average. And that's on all of the charts. I'll be watching these very closely for any kind of a pullback or any kind of a move to the downside coming into early in the week. If we start gap down, I would wait a good while before maybe I jump into the markets just to see where the markets are going to want to take that once the markets are actually open. They can move quite a bit in the after hours, but once the investors get wind of a potential dip opportunity, they tend to move in and buy that up, or at least they have been now in the past. Sooner or later they're going to stop doing that, but we have to wait for that confirmation before we make our move. We do not want to fight big money. That's suicide in the markets. We want to follow big money. NDX 60-minute doing the same thing here, and all it's done so far is just pull back over the last couple days here. You can see starting right around the 16th or so, Wednesday, Thursday, Friday time frame, we just wandered our way backwards. This is all still more bullish in its action. So we're watching to see if we get any kind of breaks up above these levels. I would not be excited about taking any kind of long in the NASDAQ until I saw something above this area here. And then back below, of course, these lower green lines for your shorting opportunities. Daily doing the same thing. We've seen a lot of move up sideways, move up sideways, move up sideways, move up sideways. Very slow, very methodical, watching the 20-day moving averages, but as it is right now, I still have to remain a little bit more neutral to bullish on this, on all of the markets based on the kind of information I'm getting in the charts. If that changes coming into the middle of the week or Tuesday, Wednesday, the first couple days of trading, then great. But until it does, I just got to do what the charts are showing me to do. Got to keep my own bias out of it. The charts are right. The charts are always right. Weekly, you can see we had the constant move up. We've had this huge move up into this area here. And now we're kind of stalling out. It's still up. It's still bullish. The trend is still there, but you can see it's starting to get tired. At least last week it was very tired. With the shortened week of trading, let's see what we get from the participation within the markets by the investors themselves. SPX 60 minutes has done the same thing everything else has done, and that is holding these upper support lines as it's moved constantly to the long side. Looking now above that 1345 area into the 1350. We are up and or around right here when we hit this 1344. That was a very big overhead resistance area for me. So I'm interested to see if we can actually break that coming into early this week. Once again, looking for any kind of a gap down, and whether or not, if we do see a gap down, whether or not it'll hold. Will the bulls take over and buy it back up again? That seems to be the mantra within the markets itself. SPX daily doing the same thing here, just wandering its way upwards into these higher levels. So if this continues, if this bullish action continues into Tuesday, you will see 1350 and potentially even the 1360-ish area start to get hit here within the markets. Right now, the trend is fine, the trend is strong, and still watching these lower 20-day moving averages. VIX daily just in a big channel. I went ahead and put the channel in on the 60-minute and the channel in on the weekly, or sorry, channel in on the daily and channel on the weekly, and you can see what we're waiting for. Lots of just no panic at all here within the markets itself. There's a lot of very just nobody in a panic right now. You can see it going all the way back to December. So I want to see these breaks out and above here, above this 1920-ish level. And I want to see it, more importantly, hold. We see any kind of push to the upside with the VIX just leads to a further drop in the in the coming weeks after that. So we want to see some actual sticking power. We want to see fear come into the markets, and more importantly, stay in the markets. And that is not something we've seen lately. So we'll continue to watch that channel. Apple in a free fall. It's got good room, I think, to get down here. Any gap down into tomorrow, I'd watch this 345, 346-ish level and see if any of this will hold for a potential bounce then within Apple. But it's been bleeding out here for a while, coming back into this 350 area. We've talked about many different areas to get short and or long along the way, and we've done pretty well on Apple if you've been following. We've had some really good opportunities to trade this thing. Right now, I'm not convinced, after looking at it this weekend, that this drop to the downside is completely over yet. So I will be watching the 345 to 347 level. Below that 345 is something to use of great caution, so I'd be watching that. And one of the bigger reasons is because we've come down and now we've touched the 20-day moving average. It held beautifully on Friday as a support area, but any, maybe we open flat for the markets tomorrow. I would see that as a very big possibility, and or this green line, if we gap down a little bit, is to be watched, and that's going to be right around that 347, 348 mark as well on the charts themselves. So, but breaks below 345. We need to start getting a little bit more cautious within Apple. It's had quite a run up here, and the potential for a 1, 2, 3, 4, 5 wave is now potentially in, so we could be in some sort of a corrective wave or whatever, if you want to look at it that way. It's very hard to tell yet. We don't have enough information to really know exactly where we're at within the quote-unquote count, if you will, of the Elliott wave stuff. So I'm not going to worry about it. I'm going to continue with my technical analysis. It's been very, very good to us in Apple. This is that overhead blue line. We had a close above it here. Steve Jobs news. We had drive back into it. We hit it, pulled back, hit it, stopped, hit it, moved above it 2 weeks ago. Last week I said I'm going to be very curious to see where Apple finishes, see if we can't get another close above this area, and guess what? We did really well up until Friday, and then it fell. Fell right back down below on this blue line. So here we are again. This blue line, as of right now, is holding really, really nice. This is why it's so important to be able to draw correct lines within your charts, because it can make a huge difference in what kind of decisions you'll make within your own trading. So we did not get another close above this blue. Once again, it's just in a consolidation right now, so the blue line is kind of part of it, kind of not part of it, depending on what we see this next week. I'm really watching closely for any pushes, as I said, below that 347, 345-ish area in Apple. That could mean that we could be in for a little bit of a further pullback, and pullback within Apple, even back to 323, is $25 from where we're at now. It's a huge move within Apple. FAS, same type of thing. We've moved up and we've consolidated sideways right into some support areas. So if it's going to break, it needs to do it early in the week, because it's in danger here of sneaking underneath this blue line and potentially maybe seeing a little bit of a drop back here. As I said, any gap down tomorrow in the markets could put this thing easily back into the 3350 to 33 area within no time at all. So I'd be watching very closely for breaks below this 50-period moving average here, and then on the daily back below about 3350 or 33, give you opportunities to play it down to, probably a good buck, I would say, back into the 20, and then, as always, watch the 20-day moving averages. is FAZ then doing the opposite. It's sitting down here on this line. If it falls through, I'm still targeting this lower blue line here on the 60. And this lower blue line here on the daily, which I've been talking about ad nauseum for quite a while. So it's the same story here, though I really have no interest in this until we get back above some of these 20-day moving averages. And even then, you're looking at still a little bit more speculative trades within the markets themselves from a financial standpoint. FAZ has been down quite a while, so if you wanted to take a small position above the 20-day, okay. Certainly wouldn't blame you for that, but I would not by any means be jumping in full bore with everything I owned into any one of the FAS or the FAZ right now. They're just too extended. I would really, really suggest you use a lot of caution with these stocks within this area. Okay, so now I'm going to show you once again what the subscribers looked at and what we traded last week, so that you'll have an idea of kind of how we play things on the subscribers news list. Some of you were asking about it. What is it? What is it like? What do you do? And let me show you then what we do on the subscribers news list. And what we do is we have more individual stock plays on the subscribers news list. So within the daily, I cover Apple and FAS and FAZ, but in the subscribers, I'll cover 3, 4, 5, 6 different individual stocks during the course of a week, or maybe 2 weeks, depending on how long it takes for them to actually work themselves out, to give you guys more opportunities at making more profits during the course of a week. And we've had some very good success with these the last few weeks. So anyway, I'll show you what I gave to my subscribers next. If you're interested in what that would pertain, stick around, watch that. It's very short. And then if you're interested in trying it out, there's a little ad to your right of the video here, and you can just click the ad and sign up and give it a whirl. All right, talk to you guys again at the end of tomorrow's trading. Bye. Alright, so once again, this is what we looked at last week on the subscribers list that I have now taken off of the subscribers list and replaced with a bunch of new stuff for this week. I'm going to show you the charts really quick, and then I'm going to give you the exact audio from last Sunday, which is right before the week started, telling people when to get in, when to get out. And then remember, every day I follow up on these and we talk about them some more, and if we're in the entry and where we put stops and what we do with them once we're in these type of trades. But this will just give you an overall idea of what's going on. So last week we did ABC. I liked it above, I think, 37-ish or so. The video will tell you. CBI on a 60-minute. I liked it long as well. PNR, I liked it on a break over like 38.50-ish or something, like 38.40-ish, I think is what it was. There it is at the end of the day. And Starbucks 60-minute, I liked it above 33 or 33.50, I think is where my entry to the long side was on it, and we got a good break there. So these were the stocks that we watched last week. And now I'm going to give you in the following bit the actual audio from my subscribers newsletter, and exactly what you'll get, the type of information you'll get on these type of stocks and how to play them. So I hope you enjoy it. We'll see you again as always tomorrow night. ABC I added to the market. I like this consolidation we're seeing here from a daily perspective, calling it above 37 and below 35. Well, if you want to get aggressive, I'd say below 35.60. Within your trades itself. You could even try a little bit of a short below the 20-day. That's pretty speculative, though. I would wait until we get back below about 35.60-ish or so here within the market. So above 37 and below 35.60. CBI, I kept on one more week. I did like what I saw here. This thing looks like it might want to push. If the markets will stay strong, if they'll stay bullish, I kind of like this CBI. We waited a couple weeks looking for that push above or below, but I'm going to tell you, I'm going to go with below 34 and still above this 35 mark. If you want to get in above 35.50, that's also still a decent place to get long the markets. I'd watch closely 36 and 36.50 for your overhead resistance areas, though. We want to see that broke, but I'm not convinced that this might not have one last little push to the upside. If the markets will stay strong, if they start to falter and drop, maybe this isn't the best call here to the long side. Then I'd be watching it to the short side. So Above 35.50 and or below 34 for your trade on CBI. PNR was one I put on here, and I like the fact that it's holding this blue line. I like it below 37.80, and I like it above 38. Let's call it 38.40 for the more conservative. So above 38.40 and below 37.80 for your long and short opportunities. The same thing is true here. Look at this: 1, 2, 3. This looks like a consolidation 4. I really am more biased to the upside on this one, to be quite honest, but I want to be cautious within the trading itself. So let's go still above that 38.40. 38.30 maybe if you want to get more aggressive, get in 10 cents early, but 38.30 or 38.40 to the long side, and below 37.50 then to the short side for a more longer term swing hold. Starbucks I put back on here too. This thing's starting to crawl its way back up into some highs, and look what it's doing. Another one of these big, long, tedious consolidations within Starbucks. And I like where it's at, and I like what it's doing right now. The information in front of me tells me that we could definitely see, maybe we're going to see another pullback here, a little extended where we're at. Maybe we pull back for a couple of days. This might take a week or two to really unfold, but I like it, and I like it above 33.50. So Starbucks above 33.50 and not, below 31.50 for a short. One of those two areas. Don't be surprised if we pull back into these moving averages and hold for a while before we get that bigger push up. But I like the consolidation we're seeing, and we may be ripe right in through here for a big break in Starbucks to the upside.